Good evening. It is currently 6:38 Eastern Standard Time. Give me 1 second. I'm going to adjust my mic a little bit. All right. So, like I said, now it is 6:39 Central Standard Time. It is a Monday, June 9th, and today I took a few trades during the London session and skipped the AM session. I'll tell you why. And then took a couple more in the PM. So that's what I'm going to recap today. Not going to spend too much time here, hopefully, but a decent amount. And so I do want to focus your attention on the Discord post that I made today. This was kind of the premise of today's speculation. So here's the first post. It is a little blurry, which kind of bothers me, but I posted at 3 a.m. This is Central Standard Time. Sorry, Eastern Standard Time. I'm running on like 3 hours of sleep today. So I did post the idea is inversion here. The PD array outlined will hold a great deal of importance on price this week. Our focus being how it is utilized to take us up into buy-side liquidity. Be patient and wait for the right setup. So I was talking about this pool right here, this right here, and this high right here. So these were my main three focuses. This was at 3 a.m., like I said. Then I said I'll be back in a few hours. I did come back, but it was a little, not really a few hours. I was up about like 30 minutes later, 40 minutes later. Couldn't manage to fall asleep. I had actually things to do early in the morning, so I just decided to stay awake. Observed the London session. It had been a while, and I saw a nice ample setup right here, trading to the fair value gap high, which was also right over here, coupled with the new week opening gap on the ES, which was basically an unchanged, the close and the open, but still it holds importance to me. And it's just basically looking at the opening price of Sunday. Now, I drew that over here, and then I captioned it saying that we should trade over here in the overnight session. Next post, we eventually did trade over there. And then I sort of drew out this buy side over here. Now I'm on the iPad, and I'm in the car on the move. So this was where I was actually writing out, I don't really know what to call it. It was a paragraph. And I did post it in a private group, but I don't really know if I wanted to post it at the time, at least, and I'm still in the same mindset. I didn't know if I wanted to open it up to the public per se. It was more just like something, like a thought that occurred to me, nothing to really do with the exact price or the market at the moment. It was just like an ideology of how to view the markets. And I was really dialed in. Something about being up at 4 a.m., 5 a.m., just really, I don't know, eye-opening. But yeah, so I'm still debating if I really want to post that, because I have it posted in a private group where really no one is. There's no one there. It's just me. So it's just like my own journal. But I really did like the message. It made me think. It had me thinking. And it was, I guess the best way to describe it is when ICT, and actually now I see why he goes on little tangents at like 3 a.m., 4 a.m. But basically, it was similar to that. It was just something that, it was a thought at first, thought turned to an idea, and then I was like, okay, you know what? I'm going to put this in my journal. So did that, not anywhere in the public right now, but it is posted, and if I feel encouraged, I might post it. Like I said, here it is, 60, 15, and 3/4 buy side liquidity edge. So we did trade up right into that high, and then came back down. Then I focused all the attention to the 5-minute 4 a.m. fair value gap, saying that should lend support to ram into that 16-15-75 buy side. So that was equal highs, and I foresaw that being taken out. Ideally, before the opening bell as a rough time filter for now. And then I accidentally mistagged the group, but I don't really know if these tags work or not, but I still use them sometimes. I'm like 50-50 about it. Anyways, here's the daily chart. As you can see down here, it's no longer up here. I've shifted it down to the top bottom right corner. It looks better, it's cleaner, tells you the date, tells you the instrument, and then the time frame. So I like it better. Daily chart, not really much. It was a small range day relative to Friday's trading, but we did take out yesterday's high right there, or previous day high, technically not yesterday, because that would be Sunday. This is Friday's candle here. Yeah, so like I said, not too much going on Monday's trading, but there was still ample opportunity. And I did talk about this new day opening gap, but before I do get into that, I did actually I mistakenly, accidentally left my mic off, or I guess it wasn't on, and one of the videos that I posted was completely mute. So the recording is up there, the visual is up there, all the annotations are there, but there's no audio, so I guess that's part of the process, you know. I did talk about 60-12 and 60-13 and how the swing projections led me to believe that we were going to trade that to that level. You can see at the screenshot, we did kind of actually close right at 60-12. So that's pretty cool, right? But the market did end up trading there on Friday, like I said. So, all right. Here's the 4-hour chart, just focusing on just this gap right here. So this is the exact gap that I outlined in the Discord. It was shaded in orange because I said I wanted it to be treated as inversion. I posted it in orange because I thought it would help, you know, whoever was reading that, whoever was the audience or the intended audience was, it would help them understand that that is going to be treated as support. Now I said be patient and wait for the right setup, and it did provide numerous setups. So I'm going to dive straight into that. Here's the hourly chart. You can see we have Monday's open. We quickly worked away from that. On the lower time frame, I'll show you the 30-minute opening range for from 12 to 12:30. So you can see still that 4-hour gap. That was the first candle, if we go back. The first candle that was formed for the new week. So this is Friday's candle, this is Sunday's candle, and this is Sunday's second candle. I don't know really how to treat this gap, if I'm being honest, but because it's a larger time frame, I feel comfortable anchoring that to Friday's hot low, that candle's right there, and then that to a Monday candle, or sorry, Sunday. All right, hourly chart, we got into that. 15-minute chart, here's the 15-minute high and low, all encapsulated inside one candle. We consolidate, right, inside this range, and then we break out higher. Right about here is where I tweeted that, you know, this gap should act as inversion. Went down to the low, dug into this imbalance, volume imbalance right here, failed to reach it, trades higher. We did attack this buy side, we did attack this buy side, and then we left these buy side pools pending. And so, you know, without getting off topic, we obviously do have this imbalance here that led a straight shot send higher into that buy side. But next chart I'm going to get into, sell side resting below here. We did dig into that at 9:30. just by a tick or two. So the sell side is at 6,001.25. We also came back into that 4-hour first presentation gap one more time, even though it worked over here, providing another opportunity to go long and target those highs above here. So like I said, I traded the London session and I skipped the AM session, and then I traded the PM session. Reason for that was I had to be up at 4 a.m. So I was up pretty late till about 3 a.m. Slept for about, 20 minutes maybe, closed my eyes, and then I had to be up at 4 a.m. Then that's when I started sending out some tweets while I was in the car, or sorry, not tweets, the Discord posts, and yeah. So I'm trying to sort of give you a timeline of how my morning or my entire day went. But yeah, during the AM session, I was dreaming. I was sleeping. Yeah. That's why I skipped it. So, and you can see that after we dug for that sell side, it was a pretty lackluster morning, just kind of trading back and forth until the PM session. So, boom, right here. This is the highlight that I was using for my swing projection for the trades that I took in the PM session. All right, so here is the 9:30 a.m. fair value gap. Now, still, this is just basically what I was and wasn't looking at for the trades that I took in the PM session and London. But I was using this consolidation as a means of swing projection, and I'll show you those swings in a second. This whole entire range. So this I didn't mark on my chart, but with the benefit of hindsight, I saw that, we did trade in that SIBI, which was formed on the 9:30 candle on a 15-minute chart. And then we have this opening price here at 9:30, treated as an order block. Beautiful reaction. Despite us consolidating, we still managed to utilize that opening price as a means to go higher into all this buy side here. So you can see how that was engineered. Perfectly. All right, here are the executions. I'm going to go through each slide and highlight each price that I executed on, right? So I took a buy here, sell here, sold here, bought back here, and then I took two more over here. But I'm going to get into that so that you can use this as a reference when I go into a 1-minute time frame, which I will do shortly, but give me 1 second. Okay, I guess not. It should technically show the price here. So what I'm going to do now is actually I'm just going to attach a I'll attach a screenshot on my community post or somewhere, maybe at the end of this recording, but I want to be fully transparent that I took a loss here, basically broke even here. It was about 2 handles or 3 handles that I managed to take off this trade before it did run all the way down here back into this 4-hour first presentation gap, and then took another loss on the first trade in the PM session, and then this one was a green trade. So there we go. That's a quick recap, but just to show you where the prices are on the 15-minute chart, I'm just going to quickly go through that. So that was the first buy order that I placed in the marketplace, and I'll dig into that on a 1-minute time frame. Stopped out. You can see it immediately ran for my stop on a 15-minute time frame. We were barely in green, or barely in profits. So it essentially didn't really get close to that. But my target was a 5-minute premium wick, consequent encroachment, and I'll show you that in a second. Here is the next sell order, which was based off the premise of that 5-minute premium wick, consequent encroachment. So a quick reversal right there. And then I cut it short over here, or cut it loose, this was, I don't want to say automated, but it was I was unattended. I wasn't really watching the chart. I just set my limit, and for some reason the trade didn't register the stop and the limit. So when I woke back up to see that it was kind of, I don't know what the right word is, because it could have been my fault. I'm not like oblivious to that. So I'm going to have to dig deeper and see whether it was my fault or was it the TradingView platform. But it doesn't really matter because there was no stop there. So I quickly cut the trade and just figured that, you know, I'll worry about it another time. Or I don't know. The thought process behind it was that, all right, I was not in control entirely, so I didn't want to stress anymore, and I had barely gotten any sleep, and I had just woken up just to see. I was kind of, it was weird. I felt connected with price. I kind of knew where it was eventually going to go. So when I was watching the midnight open, when I was watching the midnight open right here, I wanted to place an order here and catch the daily range, but it ran away without me too fast. And so I thought I could get a little continuation over here into that high, and then that did not happen. So then I saw the reaction over here, sold short, and wanted to sort of just kind of catch a little day trade, I guess, before the opening bell. And because I was not entirely in control of the trade, because it did not give me that what I wanted in terms of limit and stop prices, I didn't want to just add it in and then continue on. I just felt the slightest bit uncomfortable. So I closed the trade in profit, was happy with what I got, and it eventually did run down into that sell side. Not saying that I would have targeted that sell side, mostly just because I wouldn't have went for something that would demand a full closure of the 4-hour gap over here, right? So even though we had already traversed throughout it numerous times, it's much more low probability to trade back to the low, unless I saw it coming back into the sell side, which I did not. So there's that, we're basically kind of estimating where I would have put my stops and limits. Well, actually, my stop would have been 5 handles. My limits, where I would have put my limits, would have been below this low. All right. Then we had the 9:30 a.m. opening bell, which you can see that did dig aggressively lower into that sell side right there, revisiting the 4-hour first presentation at 6 p.m. All right. So I'm just going to go through these. You can pause if you want. Stopped out right here, going back into the imbalance right here. Took one more long and then closed it above 6 or at 6027. And right here. And here's the 1.5 standard deviation from this low to this high. Not this high, this high. Because I'm treating this as an order block for a standard deviation. So from this low to this high, not this one. It's just, once again, it's a little bit higher. I prefer a better exit. Sorry, not a better exit. A more higher probability exit than a precise exit. So if I'm missing out a handle or two, which you can see I did in this case, but it's not even something that crosses my mind. So typically I do feel a little uncomfortable with, you know, targeting lows, or that's not uncomfortable, but there is some sort of internal dialogue and conflict in my head that goes on when I'm choosing what low, which low, you know, if they're equal, which one to choose. But with swing projections, it's very simple for me. It's just, we're already getting an expansion, and it's uncertain how far it'll go up above old highs. So I just prefer to sort of get that little edge a little bit higher by just asking for less. All right. So here's a 5-minute chart. You can see the executions right here. So there's that stop triggered. And here is the sell order that I took based off of that 5-minute wick, consequent encroachment at 2:30 p.m. from Friday. So basically over here when I went long, that's exactly what I was targeting. And I got stopped out and then decided to go short here under, which was a limit order that I left after getting stopped over here. So I placed a limit over here and it just ran up in there and then it filled me for my limit, but who knows? Like maybe I didn't place a stop and maybe I didn't place a what's it called? A limit order, you know, for this entry over here. And so that's why right over here when I woke up in the middle of the night to see how this trade was going, there was no stop, there was no limit, so I got out as soon as possible. Wasn't even worried about, you know, what's likely to happen or not. Just got out. That I got from ICT, where he was just talking about, you know, when in doubt, get out, basically. That's the best way to put it. And yeah, I have that saved in my journal. So it's just something that, you know, sticking to a process. I wouldn't really say it's a rule of mine, because it's hard to enforce rules onto that. Because what if I'm, you know, live trading, like actually sitting down on a screen or on a chair and looking at a screen, and something happens where my limit and stop don't register for a second. What am I going to do? Exit the trade? There was actually a few times where I did that, but that was because I was fearful at that time. So it was just my experience kicking in. Or it was just me gathering experience. So, you know, after a few times where sometimes there's troubles with the order placement because I'm using a third-party platform to take these trades on TradingView. It's just how I prefer it. And so one time my stop didn't register and it wouldn't let me place limits. It wouldn't let me do anything. And so I just got out of the trade, canceled the order, like the little X button that closes the trade. And the trade was right. So, you know, but I don't like to worry about those things. Once again, it crosses my mind for about a few minutes, few days, and then it's done. It's really not, it's not going to be a, it's not going to be a make it or break it, is basically how I like to think about it. So went short here, bought back over here. Market did run lower below these equal lows here, revisiting this gap. Then we had this long consolidation period from, let's just say it started at about 9:30 and it ends at about 12:40. That's about 12:40. So then after, you know, that we have, excuse me, we have the run to these equal highs over here. And something I'm just kind of recalling from my notes, there was as I was going through the tweets so basically I have an archive of all of ICT's tweets and all of ICT's trades, which I'm building right now, and, you know, nesting them together and putting all the puzzle pieces together. I have the puzzle, I have all the pieces, I just gotta build it now. So that's how I like to think about it. Anyways, I did find a sticky note in my what's it called? I don't even know what you call it, where you store these little pens. I kept it there on purpose because I just wanted to keep it there. It wasn't something that was like super, once again, make it or break it for me. It was just like a little gem that I hid in my room. Honestly, I might do it more because it was really nice. It was like a little treat that I gave to myself. Saved it for later. And basically, it talked about how during the lunch hour, you can use 12:35, or sorry, is it 12:35 or 11:45? I don't have it with me, but 11:35 to 11:45 or 12:35 to 11:45, one of those. And so, not that that's something set in stone. Like, I have not back tested this, but the only way to back test it is I'm going to add it to my log. So this is me essentially logging it, and without, you know, the added benefit of precision, this is a slideshow, so I can't really go and like look at that live. But 12:30, right about there, trade into that order block, and then about 12:35 to 12:40, 12:45, that's when we start to expand, which is in my notes or on my sticky note is theoretically with no backing of this statement is a macro. And so I'd have to now go back and find that tweet or recording where I saw that he uses that as a macro. And yeah, I know it's there. I know it's there. That's like the second time I've come across it while I was collecting everything. So it's definitely there. I'm not tripping about that, but I just can't remember off the top of my head if it was 11 or 12. But it's really nothing important. I don't even know why I spent so much time talking about it. Here, all the trades, I'm just going through them. Next one over here. Stop out, buy, TP, take profit. The 1.5 standard deviation. So I'm happy about that. Great deal of precision there. And so here's the 1 minute chart. This is during the exit of the London session, not the London close, but from 1 a.m. is what I use. Typically people use 2, but 1 a.m. to 5 a.m. Here I tried to execute at the upper quadrant, basically at the high, but inside the upper quadrant as we were trading down. Tried to execute along over here and then target right there. It was about a tick. It was a tick below that. Okay, because once again, increasing my probabilities. I didn't want it to go up there and then fall short, so I just put it one tick below. I didn't even mention this, but I do have recordings of the PM session, which I will post. I feel like I'm all over the place, but you know what? That's how it is. This trade and the next trade for the London, and what is this? The New York AM session, or the New York open kill zone. I don't have recordings for those, unfortunately. But yeah, the PM session I do. So tried to go long here, stopped out right here. It was just short over there, engineered liquidity in the form of 4 equal lows, and then ran that real fast. So we do have the weekly first presented gap right here. You can work that. You can work with that using the upper and lower quadrant as to when the bodies or the candle bodies close above or below that. So here's that visually. I accidentally put this over here, but that's 5 handles, and then right above over here would be where I actually was planning to take off that long. Right? So I basically just left this as a set it and forget it, and I was just monitoring it on the side, but it did stop me out. And then once it stopped me out, I put a sell limit over here. So as price was trading up into there, I went short, which should show on this. I don't know why it's not showing. There we go. Why it was not showing or there is, oh, it's because it's out of the frame. Okay. Yeah, so then went short over there. All right. And I will post a community, something on my community page that shows all the fills at what exact price, because I thought I included it in this presentation, but I didn't. And you can see that short was actually a really good entry. And I had my stop 5 handles above. And theoretically, I had my stop 5 handles above. And theoretically, I had my limit 5 handles below. But once again, like I said, it did not fill. So technically it would have filled right about here. That's where it would have crossed the price that I was looking for. And it went further below, came back into that first presentation gap for the week. And then right about here, it just kind of happened to wake up. There's no reason. I didn't have an alarm, nothing. Just woke up, watched it for a minute or two, and, you know, decided to close it immediately. So, you know, cool, right? All right. And there's that price right at the high of the candle. So, talk about luck. That is like, the joke is that, now I'm debating if I should explain the joke. Basically, when you're selling short, this was a perfect entry short, and this was not the best exit for that short because I was exiting on a up close candle when it would have been better to exit while it was down close. But, you know, teeny tiny potato, whatever. All right, here's a full frame view of the orders. Long, stopped, short. I'll call it break even. It was about 2 handles or so, but that wasn't the intention. And I just like to treat it as a break even trade. That's the mindset. All right, PM session. That is that same order block from the 9:30 opening price, just annotated as a 15-minute order block. You can see right here at about 12:30, like I said, 12:35 to 12:45 is typically known as a lunch macro. Now, once again, no backing behind this, but it can either be 11:35 or 11:45. I have not tested. I have not done enough research into this, so this is just me putting it out there so I can remember to go back in there. Maybe one of you guys will know. All right, order block right here. I saw a price trade down into this imbalance. I wanted to use both of these imbalances, and so I felt like I had a good fill over here once we traded into the new week opening gap. Tried to get filled at that order block, just skewed off a little bit, and then ran up a little bit, came down, stopped out immediately. And so now, basically, we have taken about 2 losses. So even though I do have a rule, it's really hard to justify this, but I knew there's no justification. But the idea is that I've actually been trying to place more trades recently. And so, you know, I didn't feel the need to stop trading. I still felt like I was at my baseline and I hadn't spun out of control yet. And so I think I'm kind of growing out of that rule of 2 trades max, but, you know, I still try to stay close to that baseline of 2 trades, and emotionally I felt very able to do so, to take that next trade. So another gap right here. I utilized the high of this candle and the low of that candle, and I like this volume imbalance. So now for this trade I have a recording, for this trade I also have a recording, so I'm going to upload those after. And basically we came down, we had all these wicks here, and then we trade higher. What's this? It's a market structure shift is how I was viewing it. Also an order block. So we had a fair value gap order block, came down into that. I wanted to see it trade above the volume imbalance. And then I felt like we could spread wings to 60.27. Once it came into the fair value gap and then closed above here and then started to create this sort of stalling, I wanted to treat this as a immediate rebalance. And so I did annotate in the live recording that this immediate rebalance should hold. Otherwise, the trade is invalid and my stop is in jeopardy. I actually wanted to see this some sort of PD array where it had to tell me that price was going to expand higher. And so originally I wanted to see this treated as a breakaway. But because we had this order block here, we also obviously had this gap here. I annotated it as breakaway at first. We came down. Then I annotated it as institutional order flow entry drill. And then it came down, and then I just decided, okay, I'll treat it as a gap. And I have my stop doing exactly what it's meant to do, which was protect my position. So even though I was wrong about the breakaway gap, even though I was wrong about the institutional order flow entry drill, the idea is to not be right. It's not about being right, right or wrong. Just here to sort of take these trades and build my understanding and my experience. So that's exactly what I did. Immediate rebalance right here, trades down into it, and then right after that we trade up into these highs over here and that 60-27 standard deviation. So here's that first trade shown right here, stopped out. Here's the gap. I executed in the upper quadrant, came down, consequent encroachment, once again, trades higher, leaves a gap, trades into it, closes above the volume imbalance here. All right, so now we should ideally treat this as support. Immediate rebalance right here. I said if we lose that, stops in jeopardy. It did not do so, respecting the exact price. Right here, and the body's right here, and then ran for that. And so here's the exact entry, stop, take profit. So I think that is about it for today. What is that? 37 minutes, not bad. I do still have to upload those trade recordings, which I'll do so ASAP. But yeah, I should have those out as soon as possible. And I thought I did put my link tree in the next slide, but apparently I did not. So 3 hours of sleep, forgive me. Anything else that I have to say? The link tree will be in the bio, so if you're interested in joining any of the platforms, I'm trying to open up to as many platforms as possible. Mostly the ones that I use are Discord, YouTube, Twitter, and I'm thinking Telegram. I don't know. I'm deciding between Telegram and Discord and seeing if I can link them. But Telegram is open to the public right now. I don't think it will be forever. I want it to be a little more disclosed, like a group chat within people. So, you know, like-minded people. And I feel like Telegram is more like a text. It's better. It's not like Discord. Discord is a group, like a community group, and Telegram is a group chat, like a text message group chat. Yeah, join the Discord, join the Telegram, like this video, subscribe if you want to see more. Comment, you know, anything you felt you liked, or you resonated with, or you didn't like, talk crap, whatever. I don't care. Or don't comment. I'm just kind of talking now. Join the Discord. The Discord is really good. So I will catch you later. And yeah, talk to you soon.